Hello friends, I am Anupam Sharma and today's topic is functions of commercial bank. So you must have gone with your parents to banks. Some are private, some are commercial banks. Like commercial banks are HDFC, like Indian Bank, Oriental Bank, etc. And SBI is government bank. So all these banks wish to earn profit like any other trader or like any other businessman. So you have seen that your parents go to deposit money or to withdraw money, but commercial banks have many other functions to perform. They are divided into primary functions and secondary. Primary functions, accepting deposits. So first function of importance is accepting deposits. So people have many kinds of accounts like current account. This account is generally held by traders or businessmen, and they do transactions many times in a day. For example, they wish to deposit money or they wish to withdraw money, they can do many times in a day. This is called current account, and they are not paid any interest on that, rather they are charged interest on that. They can deposit money or withdraw any number of times in a day. Interest is not paid, but interest is charged because they are doing it very frequently in a day only. Then we have saving accounts. Like generally all public has this saving account. People can deposit money and withdraw money, but not as frequently as in current account. Some restrictions are imposed. Secondly, interest is paid. Though interest paid is slightly lower than fixed deposits. Money can be withdrawn by check. So these are the 3 points. Uh, they can deposit money and withdraw money but not as frequently as current account holders. Then some restrictions are imposed. Then interest is paid. Rate of interest is lower than fixed deposits, and money can be withdrawn by check. Then comes fixed deposits. Money is deposited for fixed time. Rate of interest is higher than saving account. Money cannot be withdrawn by check. Then second functions is advancing of loan. So there are 3 kinds of loan we'll discuss. Cash credit. Money transferred in his account against bond, share, stocks. He can withdraw any amount and pay interest on money withdrawn. Means if a person takes loan on cash credit, then his account will be opened and then money will be transferred in his account, and he'll give securities of bonds and shares, stocks, etc. He can withdraw any amount and pays interest on money withdrawn. For example, he has 1000, for example, has in his account, and he withdraws say 800. So interest will be paid on 800, not whole amount. Then demand loan. Money is transferred in account if a person is taking demand loan in his account, and bank can always ask to return amount anytime. And then short term loan. This loan is given for short time against securities. Interest is payable on full amount. So we must remember that for example, he has 1000 rupees in his account. For example, loan is given for 1000 and he withdraws only 800, then also he will have to pay interest on full amount, that is on 1000. Banks perform some secondary functions. First function is overdraft. So people who have current account, they can withdraw more money than they have in their account, because they are regular customers and their reputation is good and they are trustworthy. So bank allows them to withdraw more money than they have in their account for a short period. Then discounting bills of exchange. Holder of this bill can withdraw money before maturity by paying commission. For example, there are two people, one is seller and one is buyer. Sellers sells his goods to buyer, but buyer at present is not able to pay the amount. So they make bill of exchange. They write all terms and conditions, and for example, if he says that he will pay in 3 months, so bill of exchange will be uh, made for 3 months. For example, seller needs money and he produces his bill of exchange to the bank in 2 months. So bank will give him the amount, but cut commission or cut rate of interest, say 5%, whatever, and give him the money. For example, he has 1000 rupees, his bill of exchange is of rupees 1000 rupees, and bank cuts 10 rupees and give him 990, and after 3 months a bank will charge from buyer who will pay him 1000. This is called bill of exchange. Then comes agency functions. So bank on behalf of its clients do agency functions, work from them. For example, transfer of cash. For his client, he'll transfer his cash from one bank to another, or some other person as advised by his client. Collect check, bills, interest, dividends, rent on behalf of his client. Sale and purchase of foreign exchange. Some banks are allowed, so on his client's behalf he can sell, purchase foreign exchange. Sale, purchase of securities can also be done by bank on his client's behalf. Advisor of tax, he can file his tax return and advise on that. And works as trustee, means after his death he will execute his will. Bank provides other general utility services. First is locker facility. Locker facility. You must have seen your parents have lockers in their banks. So what do they keep? They keep their jewelry, precious things, or maybe important documents. Then bank provides traveler checks to the people who are traveling, and this way they don't have to carry cash, and so this way their cash is safe. Then underwriter of securities, shares and bonds on behalf of its other companies. Banks sell their securities, shares and bonds, and people have faith in them, in the bank, so they purchase these securities. Publishing of data of trade and industry, and they also advise them on financial matters. So students, if you liked my video, please like, share and subscribe. Press bell icon button. Our next video will be on how commercial banks create credit. Thank you very much.